Hello everyone and welcome to the latest cereal and oilseed market update. I hope you're all doing absolutely brilliant. The recently released planting variety survey by the AHDB saw a significant change in the cropping areas due to adverse weather. To start with, the area of oilseed rape does not pose significant optimism for production as we start this marketing year, with the area in England and Scotland dropping to 387,000 hectares. This is the lowest area recorded in England since 2002. Initially, first yields were reported low, but anecdotally we have heard of some high and very variable yields as harvest has been progressing. We also saw poor autumn drilling reduce the overall wheat area by 25%. The area predicted for harvest now stands at 1.363 million hectares. Regional production has dropped in productive areas such as the East Midlands. Going into this marketing year, although our price will be set at import parity, there could be a large degree of fluidity within our cash market via delivered premiums, as we give incentive for grain to move north. For a closer look at our planting variety survey, please be sure to check out the link in the description for the full details. Recently, the oilseed complex has been quite well supported as the global economy comes back online. But there are questions to whether this can be sustained going into this marketing year. Questions around COVID-19 and its possible implications as we adapt globally to a new normal will be a focus point. Further to that, Chinese purchases of US soybeans are also helping to support vegetable oils as well, even if they are way off fulfilling their Phase 1 trade agreement. As Brexit Day looms closer, once again, sterling will be heavily reactive towards this. With current support in the vegetable oil complex and a weak sterling, this is posing a great opportunity for our domestic rapeseed pricing at the moment. But whether the support will be sustained will depend on demand for oilseeds in general. Finally, a quick look at wheat markets. As we mentioned, the current view of global wheat is quite well supplied for this marketing year. However, we could see significant support come if crops are smaller than expected. Russian crop forecasts have moved lower in recent weeks, but are still historically large, as there has been some uncertainty over production as initial yields are poorer than expected. Russian production will be a key watch point as they conventionally are the lowest price supply of wheat onto the global market. A swing in the size of the Russian crop could see markets react. There has also been further cuts in the Black Sea as the Ukraine has cut its production and export output for this marketing year. The IGC has also revised down the EU wheat production to 125.6 million tonnes in their latest report, as soggy conditions in autumn met with a dry hot spring have affected yields. Further to that, there's been reductions in Argentina as persistent dry weather along the Pampas grain belt has meant that harvest estimates this year range from 18 to 19 million tonnes, with initial forecasts at 21 to 22 million tonnes. Planting is nearly complete now in Argentina, and dryness in the northern and central regions is continuing and will affect development of the recently planted crops. Northern Hemisphere production will become clearer as we head throughout harvest, with France now 71% complete. Germany is set to start in the coming weeks in southern regions. Also in Saskatchewan province of Canada, they are also set to start in the coming weeks. Ongoing weather and yields will be a key watch point. For more market analysis as we commence this marketing year, please be sure to check out the AHDB website with the link in the description.